Hey everyone, welcome to the Traderline podcast. I'm your host, Richard Moglen. With me is the U.S. Investing Champion of 2020, Oliver Kell, who achieved an outstanding 941% last year in the competition against some stellar traders. So, Oliver, great to have you on the podcast. Welcome.
Thanks for having me, Richard. Glad to be here.
No problem. So, in today's podcast, we're kind of focusing about kind of your journey before the actual competition and championship, because it's always interesting to hear about people's backgrounds. So to start things off, basically, can you tell us a little bit about your journey prior to trading? How do you get interested in the markets?
Sure. So my dad was a market maker. So my dad worked on the Pacific Exchange. He was a market maker for 30 years or so. So when we would have half days from school, the market would close at 1 and we would head into the floor. I have 4 siblings, so the 5 of us would be running around, picking up paper and all the stuff. All the floor traders loved it. I just kind of had exposure to that. I truly didn't really know what the heck they were doing other than it was the stock market. And, we got to go run around and have fun, and hit the soda machine after. So that was, kind of how I, understood what trading was. And then my senior year of college, I played football in college, and kind of after the season, I think a lot of kids where I went to school were really thinking about what they wanted to do. I really wasn't. But then you kind of get to, winter break and you're like, oh man, there's 1 semester left. What am I going to do? And I think I went out to see my dad in the Bay Area, and we actually went into the old ARCA exchange. And, I remember this day because I think my dad was a little emotional about it, but we saw, kids of guys who he had traded with their dads, 30 years prior, things like that. I kind of started talking to him a little bit more about trading. I had a buddy I played football with who was 2 years older than me, who worked at First New York Securities. We were pretty tight, and he gave me their reading list. So basically my senior spring, I'd taken a lot of classes ahead and I didn't have a very packed schedule. I designed it that way for different reasons. But really is what I ended up doing with my free time was just, I started pouring through all the books that people know. I had a kid I played football with whose dad, excellent trader, has his own fund and, really good. And basically his advice was you have to start trading. You can read all the books, you can do all that stuff. But you really just need to start, and you're probably going to lose money for a while. Eventually I took his advice. I'd kind of planned to go get a job selling insurance and stuff like that, but I ended up just taking my money and putting up money to go work at what I would consider, one of these bucket shops in New York. There's plenty of them. And that was, I just kind of hopped right in, and I was naive enough to think that I was going to just start making money right away.
Cool. And I'm always curious when I've talked to people like Ryan Pierpont. He was an athlete, a baseball player before. How do you think being a football player and like knowing that competitive spirit impacts your trading?
Yeah, I mean, I think it's huge. I don't think it's by mistake that you see, a lot of athletes or former athletes get in and do well in trading. Um, just before the games and all the stuff people don't see, the work ethic, the grind, the weight room, the running, all that type of stuff. That's all required to trade. I mean, a lot of people think you just make a good trade, but there's a lot of work that goes on behind the scenes, making sure you're prepared and you've, built your strategy over time. So
A
you
lot
know
of
how to
discipline.
execute. Exactly. Yeah. Discipline. And then, similarly, you can work your tail off and lose the game,
Right.
which trading can be just like that. You can do everything right. Maybe you're playing great, but you're just not winning games.
Right.
And you kind of have to know how to deal with that emotionally, which I think you'd be hard pressed to find somebody who trades who doesn't go through ruts at some point, and you've just got to know how to deal with that, which I think sports prepare you very well for that. And then I think just, for me, I do feel like when the market's open, everybody says you're competing against yourself, and that's totally true. But I do kind of have this feeling that I'm competing, against Goldman or whatever, and
Right.
I want to win.
Right.
So I think being an athlete, kind of sets you up with the characteristics it takes to do well in this business.
Absolutely. Yeah. Dealing with failure is something every trader has to understand. And I don't know if you've ever had like a big injury that you like, it just sucks, but you have to work through it and slowly get back to where you were. And trading's very similar, I think.
Yeah, absolutely. I think my senior year of college, I was just like a walking injury. I was in the trainer's room all week, and they'd kind of patch me together and put me on the field. um, so, yeah, exactly.
Perfect. And tell me a little bit more about working for an institution and doing institutional sales and trading for large institutions, and how you've kind of applied what you learned there to your current methods and current strategy.
Sure. So I worked as on what's called an outsourced desk. So basically, we would have funds that they didn't want to hire an internal trader, so they hired me and my boss essentially. So I worked,
Hmm.
as part of a two-man team. We traded for some, billion plus funds. I would say on the low end, a small fund for us might have been like 80 to 100 million or something. Um, so, as far as what I learned, I think at the time I didn't really know what I was learning, other than I was learning how to do that job.
Right.
But now I can kind of see things happen, or I can see a big block hit the tape. And I kind of have a feeling as to how that's going to affect the stock, or this guy's likely going to try to protect that price, things like that. I've been fortunate to literally work an order for a guy who bought 10-15% of an entire well-known company. And I got to see him work that order, and understood how VWAPs worked, all that. But then in this guy's case, I realized he really wanted to buy the company, like
Right.
literally the whole thing. So he had this frustration in that he's trying to buy 100 times the average daily volume, which is just not possible.
Right.
And you're trying to help him get that order done, and just his thought process. And hey, where did we buy it last week? I mean, this guy would call up randomly and want to buy 1 million shares of a stock that would trade 300,000 a day.
Right.
And then just hunting for anybody we could find who might be able or willing to put their shares on the market so we could print a block. I've been through situations with big funds where maybe they already owned 20-25% of a company in bankruptcy. They were part of restructuring it, etc. And then somewhere along the line, maybe they want to get out, and
Right.
that's kind of tough to do. So then other situations, maybe smaller funds, maybe less share size, but maybe you're shorting the stock to get in position to show them a bid, stuff like that. But just little things, understanding how to look up and read 13F filings. We would go through those a lot.
Hmm.
If I had a fund that owned XYZ stock, I want to know who the top holders are in there,
Right.
because if something's going to happen, if there's activity, if I can find order flow, I want to be hitting all those guys up, because maybe they turn into a client down the line, or I just can kind of have that relationship to work with my current customer. Just the amount of things you learn, it's really endless. I could probably talk about it for new things would hit me as we
Yeah.
just discussed it further. But yeah, very valuable stuff. I don't think any of it like is part of my specific strategy per se. I would say maybe one of the main takeaways that has less to do with the actual trading is that there's so many people involved in the market, and you could have 5 different people trading, investing, whatever you want to call it, in the same stock with totally different objectives.
Right.
I could be buying 100,000 shares of Walmart for a directional guy, who's high risk, and then I'm putting I don't know, 100,000 shares on the tape, but I'm doing it in alignment by, selling covered calls against it for a call right strategy. And they're very, very risk averse.
Right.
But, to the untrained eye, what they're doing, if you're just looking at the stock, looks the exact same, right? They're buying 100,000 shares. So there's just a lot of different ways people approach the market. I think for a lot of smaller folks, like myself, we're momentum based because we can do that.
Right.
But not everybody can. So just kind of understanding all the different people involved in the market is important.
Perfect. And obviously, last year in the competition, it was an outstanding year. That everything kind of came together. But talk to me a little bit about the years leading up to that, and some of the mistakes and kind of pitfalls that you had to overcome to really put together your strategy and have a type of year like you had last year.
Yeah, so I mean, really, the majority of my, trading career is a lot of failure. I mean, more failure than good. So I started out at that original bucket shop, and I think I put up like 5 grand or something, and they gave me a couple 100,000 in buying power. And I look back at this, and I actually considered a win. I only lost $2,500 in like 3.5 months. And then I quit there. Just what our strategy just I knew wasn't for me. Then I got a job in international arbitrage. Very fortunate to have been working at this place. It was a great opportunity. The mistake I made starting out is I had two mentors who were both very different traders. One was very aggressive. He's probably going to see this and laugh. um, and the other was probably much more risk averse, kind of more chipping and putting, and just trying to make a living intraday, not really swinging for the fences. So I had these two different people, and I didn't really know who I was as a trader. And
Right.
I think I followed the aggressive guy in on a couple trades, and maybe was in a little bit of a hole, starting out, but I didn't really know what the trades were we were even doing. So that's one kind of pitfall right there is, you want to have a mentor, you want to be learning from someone, all those things, but like you kind of need to know what it is that you're doing, what's your
Right.
angle, what's your strategy, or else you're just following, right?
Right.
And then two is an international arbitrage. I think when a lot of those guys that I was learning from had got in, and I'm speculating here a little bit, I think when they had got into international arbitrage, you could have News Corp trading a percent above parity in the US, you could short it, you could do your Aussie dollars, and you could cover half in Australia and make 1%, just because the markets weren't as efficient. And I think they could do that all day long. So I think maybe some of that was still going on, but it just didn't work as well. And it's what I mean is even international arbitrage, the straight up arbs weren't really there. I would say you really had to judge sentiment, and that you wanted to know what charts were doing and all those things, because something may be trading a percent above parity in the US, but heck, that thing's ripping, and they like News Corp more in Australia than in the US. So it's going to open up even higher. And if
Right.
you're short it, you're down at a loss. So, I had to learn that the hard way. And just really sentiment, like, is what I learned. In different stocks in different countries were treated differently. So News Corp was a stock I traded a lot of. They liked it more in Australia than the US. So if you could find an uptrending market and you could somehow get it at a discount in the US, it was likely going to be a good trade into Australia. And it could work vice versa in bad markets, etc. But kind of understanding that sentiment was huge, and I didn't grasp that, I don't think, while I was there. But really, when I was there, I kind of realized the ARB stuff wasn't for me, and I started learning from this guy on Twitter, Trader Florida. Actually started doing pretty well, making some money. And on my second best day ever, this was like 2011, I lost my job because I was short the market. I was the smallest trader in our firm by far. And a lot of guys kind of got caught long, and a lot of commodity type stuff, long the Aussie dollar. And I didn't see that coming, right?
Right.
I was like pretty young, didn't really know the difference, thought I was doing great, and then job's gone. So then I did international, or then I went and I worked at the sales and trading. Kind of went over that, so I'll kind of skip that. But I did trade my accounts there. Had a lot of restrictions, and I thought if I could kind of get out of there and focus more on my trading, that would help. But I ended up selling mutual funds, and I had like I think originally it was a 30-day hold and then a 90-day hold, and that was like
That's
three.
tough. Yeah.
Yeah, it was pretty tough. It was like 3 years. And at the time, I remember thinking, this is impossible. I don't even know why I'm doing this. I started more just kind of buying index funds and stuff like that, but I still traded. And is what kind of happened there for me is priceless, because I would buy stocks and I would, look for a chart pattern, all the things that I do now. But now, something doesn't work, I just pitch it out, no big deal.
Right.
But then if it didn't work, I'd have to watch it go down. And sometimes I'd be in crisis mode and then it would come right back up and turn into a winner. Or sometimes it'd be a huge winner. And, 5 days before I'm able to sell it, it'd come back down and, I'd sell it at cost, or, even worse, be up big and sell it at a loss. And kind of the key thing there, though, is I was, sort of forced to go through all the emotions that you could possibly have,
Right.
without any ability to do anything. So is what I did do is I was still looking at charts every night. I was still doing all the things that, you do if you're trying to learn. And I kind of developed my strategy really, at that point in time, just kind of how things moved around the moving averages. I had all the knowledge from the books. I'd read William O'Neill, I'd read Minervini, I'd read all these guys, multiple times.
Mm-hmm.
But going through that sort of allowed me to kind of understand how, price action worked in a different way, different than being taught it and being shown a pattern, being shown higher highs and higher lows, really just from a perspective that you kind of have to be in a situation where you can't trade to experience. So that was invaluable to me. And then, I think when I finally got back to really trading, I had this new strategy I loved. Didn't really work out. Didn't really work out. So I put a bunch of my money into real estate, and I went all in on that. Had a bunch of setbacks there, but pushed through. Basically, it's like the same thing as trading. Like anything you get into,
You gotta learn. Yeah.
yeah, you kind of get whacked around, and then if you keep at it and keep your head down, you persevere. But I realized I kind of, once I felt like I'd sort of figured that out, and you never really figure it out, I sort of lost interest in it from more than just like this is a good long-term investment perspective.
Right.
So I started trading again, and I had still been paying attention to the market and trading a smaller account. But I got back into it, and I still, like, I started having some success, kind of chipping and putting, and then I'd give back, and I'd have some success and I'd give back. And then, really it's what I've been trying to do that whole time, the last 3 or 4 years, 5 years or so, is basically just learn how to keep my money. Because that's really kind of the difference. I think that most people can make money when the market's good. And you can certainly refine those skills. And I think a lot of refining those skills is kind of, getting a hold of your emotions, at specific points in time when you should be doing something, but it's, scary or whatnot. But once you have enough experience, it's not scary anymore. It's almost like the game kind of slows down. And then just kind of, creating rules to trade less.
Right.
I'm a chronic overtrader, so, trying to trade less, make rules for that, not trade corrections. I went through a phase there where it was like, oh, I'm going to shorten my time frame and day trade the correction. And I still do that to a degree, But I think really is what I'm working towards is either getting my shorts right from the beginning, and if I don't, just literally sit out, because I think it's going to be important for me to kind of get that mental reset. So just kind of building up on all those things, from literally, going at it, failing,
Yeah.
losing my job, having to get another job, having the restrictions and going through that. And at the time you kind of think it's like the end of the world when when a winner turns into a loser, but you look back and it is what it is. It's not as much money as you thought at the time. um, to just kind of grinding it out and doing everything that I'm still doing right now. You know Everybody thinks I do like 900% a year, which is just not reality. So I'm grinding it out. I'm trying to do my best. I'm trying to put money on the board every single month, and just trade well. Say same thing as everybody else.
Yeah, the common thread for me there through all that, whatever you do, you just persevere, 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 keep trying, keep taking a shot at it. And talking about over trading, it was really cool. I think yesterday we were going over the slides in preparation for the webinars, and you were showing us how you use the moving averages and how they flatten out after correction. You're like, wow, maybe we should just wait until we finally get the wedge pop at the very end and just kind of let everything else go during the correction. So over trading seems to be a common thread with a lot of people's mistakes.
Yeah, I mean, I think cutting down on over trading and keeping your money in a correction, I think if people could do that, they would make probably 2x the money they make right now,
Right,
for
right.
the most part.
Right. Tell me a little bit about competing in 2020, a kind of overview and recap, because you were up against some amazing traders, a lot of people who I've interviewed and are fantastic educators and teachers, Matt Caruso, Anish, and Ryan. So tell me a little bit about that overall experience and kind of your big takeaways from that year.
Yeah, so I didn't really realize, and maybe it's not a big deal, but seems like people make it out to be a big deal. I didn't really realize it was that big a deal. I kind of entered for fun. I've been trading. I, feel like I, know what I'm doing, have a pretty good feel for the tape. And I wanted to enter to just see how I would do.
Right.
In reality, it was nothing more than that. Um, then when I kind of got into it and, call it like the 6 month mark or so, where I think myself, Tomas, Matt, had kind of, the three of us had really separated ourselves from the group. Maybe Anish was still right there. Um, but it became fun at first, because it was kind of cool. Like, wow, we're putting up like really big numbers. This is crazy. I do think that it probably, caused me, especially when I knew the market was likely to kind of come in, it made me a little more reluctant to sell, because I kind of felt like, I need to stay, it messes with you a little bit, I would
Right.
say. So I don't know if it's the best idea for some people. Um, and then I would say, I had a tough patch right around this time of the year. And, October-ish or so, where I had a drawdown, and when everybody knows your performance and when everything for you seems to just be going wrong, it's just adds more pressure. And,
Right.
because at that point you're 9 months in, and that's the thing people don't realize, it's a long competition. You're 9 months in, and, I'm telling my wife like, oh man, I blew it. I just totally blew it. And you're a little down. And I gotta say, my wife is just a bulldog, always doubles down on me whenever I'm a little down and out myself. And I got some advice from some mentors and folks who have helped me out. And I was able to regroup and just get back to basics, which is something that I always try to do when I'm in a slump, is get back to basics, make one good trade, size down, maybe trade like 30% of your account or something, get two good trades. And then I find that all of a sudden you start to see things more clearly. And
Yeah.
often you were just trying to, not trade a good market. And when the market gets good, it becomes obvious, at least to me. And I think the rest is history.
For sure. And I gotta say, it's been really cool meeting with you and prepping these slides for the webinars and getting kind of some personal lessons and seeing really how you interpret the market cycle. But I'm curious, what are you most looking forward to when it comes to the masterclass we'll be putting on for swing trading, kind of passing along your style?
Yeah, so I mean, I think I'm a little reluctant to do it at first, but I think I wrote the book, and really when I wrote the book, it was kind of a pain for me
Yeah,
to do it, to be completely honest. Um, and I wrote it and I put it out there, and I didn't really expect much to come of it, to be completely frank. And then I get messages from people who it's really helped them, or they've studied all this stuff and it's so complicated, but my approach is very simple, and just literally using like the 20 period moving average and not getting long below it and not getting short above it. I've had people say that's the only thing I have taken away, and my performance has gone up dramatically.
right,
And I was
right.
like, okay. So basically I decided to do this course, after, talking to you guys. And my goal is, hopefully this can help people. And if I can give more details, if the Q&A, if somebody has a specific question that, maybe I just wouldn't think to speak about, and if I can answer that and it makes a big difference in their trading, then that's the goal for me.
Right.
Because I think about how much time and effort I put in, and I really had a mentor who I don't think anybody would know who he is, who really, he actually saw me on Twitter struggling, because I would post charts on Twitter when I didn't make money, and I would actually, basically say like, wow, I really blew that one. And he reached out to me and he kind of became a mentor, and we reconnected, post investing championship, because he got off FinTwit. And I kind of just think to how he helped me, and he certainly made a big difference, in my life. And if I can, help one person, or, then it's, that's really the goal. Hopefully a lot of people, but that's the goal for me.
Perfect. No, no, that's awesome. And if you're interested in that, we'll have a link down below in the description and popping up right now. The first one is this weekend, the 16th, and then we're going to do 4 different webinars talking about different specific sections of Oliver's style. I think the last one is probably going to be my favorite on mindset, which just isn't talked about enough. And you touched on that a little bit today. So with that, Oliver, any kind of last words for people who are watching this? And yeah, any last words?
No, just always a pleasure to talk to you, Richard. I've
Yeah.
enjoyed working through the course with you too. I'm a huge fan of yours, as you know, and I can't wait to see, what you're doing now, and what you're going to be doing in the future too. So it's always fun.
Awesome. Thanks, Oliver. To everybody watching, go ahead and leave a like down below and subscribe if you haven't already to the Traderline channel. And we'll see you guys in future videos. Thanks.